Price targets. Price targets are an essential part of trading, having a trading plan and effectively managing risk. Price targets are price points where you will either take all or some of your profits from a potential trade. We'll be looking at two methodologies today. The first, how to set price targets based on a concept called a measured move. This applies to chart patterns. The second, we'll be using basic trend lines to determine price targets. We'll then look to combine these two strategies to determine the best overall target to take profits. But let's jump in with three basic chart patterns and how to calculate the measured move for each one. So this is an inverse head and shoulders reversal pattern. Left shoulder, head, right shoulder, and the neckline here. You calculate the measured move from this pattern by measuring its depth, or rather the height of the pattern. When the price action then breaks the neckline, you then use the height of the pattern to determine what the measured move will be, and that is your price target. That is where you potentially would take profits from a breakout of this pattern. Let's take a look at a double bottom now. When calculating the measured move for a double bottom, it's exactly the same as with an inverse head and shoulders. You simply measure the height of the pattern from its neckline to its lowest point, and then when the price action breaks the neckline, breaks out, that height determines the measured move, and that becomes your take profit price point. That becomes your price target. So with a falling wedge, just like the double bottom and an inverse head and shoulders, you measure the height of the pattern, and then whenever the price breaks out, you then use that height to calculate the measured move and determine a good take profit price point. It's that simple. So that's how you set targets for the breakout of patterns. You measure the height, and then that determines the move upon a breakout. Now, let's take a look at our second methodology, to use basic trend lines to determine price targets. This is Cyber, our top altcoin pick for today, where the price action is just breaking out of this cup and handle reversal pattern. And I have highlighted three targets on my chart. So after you've charted a potential trade, you will already have worked out where your trend lines are. These trend lines, when they are above the price action, automatically become price targets, as the price action is forced to pause and negotiate these trend lines as the price action progresses upwards. So the question is not which trend line is a price target, as they all potentially are, but which trend lines are you going to choose to use as a price target given the conditions in the market at the time of your trade. As an example, when the market is uncertain, the price action may progress to target 1, but then sell off. So you need to take profits there. But when the market is bullish, target 2 has a much better chance of being hit. So it's a negotiation with the current trading weather, whether or not you are trading an uptrend or consolidation, and how long you want the trade to last. Short-term trades will typically be aiming at just target 1 or target 2. Medium to long-term trades might include target 3 or higher. So how do we combine using trend lines as price targets with measured moves from chart pattern breakouts? Well, we have our trend lines here, and thankfully we have a nice chart pattern here to calculate the measured move. So I'm going to just find the neckline and measure the height of the pattern, and then use this to see where the measured move will be following a breakout, which has just happened. As you can see, the measured move is here just below target 2. And because currently the market is turning bullish, Bitcoin is in an uptrend as an example, and other coins are moving quite well, target 2 for the current weather conditions would be a good choice. And because the measured move supports that, the price action will come up to around this level. That is why I have chosen target 2 for this trade. You don't just rely on the measured move, you don't just rely on a trend line, you look at the wider perspective of the market and then use both to determine where to take profits. We've only just scratched the surface setting price targets today. In a future video, we will look at Fibonacci retracement levels and various other methodologies to help you take profits successfully, including how to scale out of your positions. In uncertain market conditions, which price target should you choose? A, target 1, B, target 2, or C, target 3? The answer is A, target 1. Successful trading requires realistic price targets, not just based on the price action you are seeing from the specific token or coin you are trading, but also based on what Bitcoin and the wider market is doing. As an example, if Bitcoin is giving mixed signals about its next potential move, altcoins will wait to have a definitive direction out of Bitcoin before putting in any significant upwards moves itself. So trading during these conditions requires taking profits quickly at the first trend line, at the first target point, and not staying in a trade to stubbornly wait for target 2, as it may never come.